I think we had a discussion about intro. So all these are the contents. So let's quickly try to understand why we required a plant abroad. For example, you are having operations in Germany. That means your plant can able to do the stock transfer. Your plant can able to do the sell the stock to other European customer. Okay, such a case, the plant abroad will comes into picture. Simply, I can say that suppose if you have a company code in one country, any one of the European country, you take France or Europe or else Slovakia or else Belgium, any country you take, the company code is holding its domestic plant. Okay. Apart from that, any other plant, for example, if you take Germany, for Germany, you're assigning Germany plant. Okay, and you're taking and assigning another Poland or some kind of other plant. Okay, such a cases, in between plant to plant stock transfer, other business operations happens based on the your foreign country requirements, or else from foreign country you're importing the stock actually to domestic country. Such a cases, so your company code is belongs to Germany, so then your plant is belongs to Germany. For Germany plant company code, if you are assigning other foreign country, then we'll call that scenario is it as a plant abroad scenario. Okay, so I will show you detailed example. So for example, if you see, generally which scenarios organization structure having branches. For example, you take the same example, Germany. So different countries, European countries or non-European countries, if you have plants in between, the tax need to be mapped and managed actually. Sometimes it is our plant only, right? If you would like to show to the government it's as a zero, that report it is called intrastate report. Okay, intrastate report. Such a cases will try to manage it. That's the concept behind in it. It's very very important. So why I'm doing this video also have a specific reason. If someone is working in a European project for a long time, they should know. Otherwise, someone is newly entering into this project, it's a tough time. So I have more than 10 plus years of experience. First time when I'm trying to listen this, I confused myself actually. So many blocks available. What is the thing is that, but I would like to show you videos so that it will be helpful to your careers actually. So you can see this organization have a branches outside the company code of the country. So that means for Germany, if you assign to Slovakia or any other country, I will show you the example, don't worry. Moreover, so what is the advantage? So branches, this is one kind of business scenario. You will have multiple branches in between, STO happens, or else for your customer stock is, you're selling. So such a cases, it will be helpful. Another one is organization may be selling consumer B2C, business to customer in other countries. Okay, such a cases also it will happen. Okay, if they sell goods sent to the consumers in other country of EU country, they need to register their charge VAT at the rate applicable in that country. Okay, this is one scenario. However, if they are selling B2B, business to business, they don't charge the VAT. Okay, if the customer has is a valid VAT number, they don't charge it. The customer in this case account for the VAT on this transaction as a goods himself actually. So don't get into this complex examples. You read it. I have given a text here, but I will try to show you one practical examples. Most of the times I have seen in two projects actually. You see this, the example which I am trying to tell you in theoretically. If you see this org structure level understanding, okay. Generally, what happens? You have a company called Germany, okay, and you have a plant from Germany. But generally, what happens in a inter STO? What happens if it is from outside of the country? It has a France company code. It has a Slovakia company code separately. But it's not the case here. We'll assign the plan to the, so this France will be abroad to Germany. Germany will be abroad to France actually. right? If you are living this country and you are going outside, then that is abroad to you, right? In the similar way, business also, some France to Germany, if I supposed to selling some stock, then what is the settings need to get involved, that we are going to see. Okay, so we'll take the, in our practical example, German company code and German plant. From plant France to Germany will stock transfer, or else we'll take the plant Slovakia to Germany, we can stock transfer. So it's not so easy. If you know interest on top of it, these settings will come, then it is easy, but it has a little choices at the time of configuring. You will get a lot of bugs actually. So anyhow, it's a choice, it's human effort, we can try this, you can see this. So then France will be plant abroad. Okay, so this I'm not assigning to France company code, I'm assigning to German company code. Let's see this. So like, in between these two plants, we're going to generate one report called interest at report to show the invoice value as 0. Okay, we'll see import or dispatch side, import or receiving side, dispatch or export side. That report will be there. Okay, we'll get into that. So why, let's see in next sessions what exactly happens and what are all the advantages with the plant abroad actually. So I think with this example you can understand, right? Always remember, so you take any, apart from your domestic company code and plant, you take any other plant. From this plant you are taking the stock, then this is plant abroad. So thank you. Thank you so much. We'll catch up in next session for further understanding.